course, Disney has a big theme park in Shanghai, a very important one. In fact, Bob Iger and Bob Chapek took what I understand is 17 trips together to visit Shanghai. They spent a lot of time together for some period of time. I mention that because it is day 2 now of Iger's return. Chapek's departure.
Good
segue,
segue, man.
Wasn't that bad? Share a little, a little anecdote, yeah. And Iger's already busy, guys. You saw this late in the day. Not unexpected, in fact. Iger doesn't like central planning. You remember when he came in the first time after Michael Eisner's reign, what did Bob Iger do? One of the big things he did was he got rid of that sort of central planning.
Right.
Remember?
Right, which is
move the P&Ls much closer to the business
but
units.
That's what people want. It's called accountability. Mm-hmm. It's very hard with central planning to figure out, let's say Avatar.
Yeah.
Number 2 is coming out in, $250 million?
Right.
Let's say it doesn't do well. Whose fault is it? Other than Christine McCarthy, the CFO.
Right. No.
They threw under the...
It's like blaming presidents for inflation. Like,
oh, my God.
Well,
there's that bus that goes cross dam.
No, you're right. And
they threw her under that cross dam.
In this way, you can hold people more accountable, and they'll be more focused on actually getting it right when it comes to cost. Now, that said, as he sort of goes through a lot of the things that we're going to be watching him deal with in the next couple of years, direct to consumer, a lot of that money has already been spent on the platform. We'll see how they choose to amortize the costs over time, and things of that nature. And then sports and sports rights we've talked about. But this was an important move. Kareem Daniel is gone. Of course, he was Chapek's main guy running this sort of overall sort of deciding.
It was actually a company within a company is what...
is that how it's been described to you?
Company within a company.
And the other thing that's come up in a number of conversations, guys, is this 2-year term. Nobody believes it's going to be 2 years. I've talked to CEOs of 2 other major entertainment media companies. Both of them have said, 2 years. Forget that. He needs 5.
5. To turn it around?
He's the Tom Brady of media. He might as well. He's going to go long. Might as well just say it's going to be 5. It's not going to be 2. We'll see.
Is he in Bitcoin?
We'll see whether, in fact, that's the case. But that is the latest sort of chatter. Like 2 years, you're not, you stabilize, you make operational changes, but really, what are you going to be able to do strategically in 2 years? Also, you're supposed to be looking for your successor.
And we're supposed to talk about Hulu. Every time you mention, we're supposed to talk about Hulu.
Well, 2024, the option to purchase the 33% that's owned by Comcast.
What are they going to use? Wampum? What is it?
They're going to pay cash.
Cash?
Yeah.
Actual cash.
$9 billion, right?
Yeah.
But they got the cash? Where's the cash? What are they going to sell? What are they going to sell?
I don't know, Jim.
A Disneyland? What are they going to sell? What do they have? The rights to, I don't know, The Simpsons? How much did that cost them? $30 billion?
Well, here's Deutsche Now. Many have called for a sale of ESPN, and Mr. Iger has surely evaluated this option in the past.
Well, they can go to Hearst and sell the rest of them to him.
We shared a conversation, part of the conversation we had less than a year ago with Iger about ESPN and sports rights. We shared that yesterday. He thought that was Bob Chapek's issue, but he said he'd be pressing harder in terms of sports rights overall to get as many platforms as you possibly can in terms of those rights.
Well, they've not used the platforms correctly. They've not.
Right.
They don't acknowledge. They have one little fantasy channel, which is awful. They haven't been able to figure out how to monetize gambling. They don't even know about gambling.
Well, no, that's not true. They do know about gambling.
Oh, do they really?
Well, Chapek and I did talk about it on our last interview in September.
They're good talkers.
We are going to talk to the Cowen analyst later this morning who said yesterday, Jim, what you've been saying for a long time, and that is the Fox asset purchase was a strategic error. Right. It would have been smarter to launch it without that, maybe price it better. And there's this big debate about general entertainment versus core Disney fare.
Price what? I mean, they priced Disney Plus, though, at $6.99. That was incredibly low.
All they cared about was the empty calories.
But now it's coming up.
They wanted to get the number. They missed the whole pivot that a lot of the software companies did, too, which is that, we want companies to make money. We don't want them to just sign people up.
Everybody missed that pivot, Jim.
Well, no, not everybody missed that pivot.
Okay, who did?
Well, it was late to the game, but Dara realized he needed to pivot. That was that famous memo. That amazing memo Dara Khosrowshahi put out about Uber, where he says, we can't just keep losing money. That's not what people want anymore. I mean, that was like one of those memos. It's like, imagine if you went to your mom and said, listen, I got a job. I get to lose $20,000 this year. I think she would say, well, no, you see, the goal is to make money. Well, no, and you say, no, Mom, you're missing the whole point. The goal is volume. I mean, she would say, David, give me somebody else in the family.